Hi guys, welcome back. Now let's go over the market first. After many days, today is one of the few days that Nasdaq performed the best out of the three major index. Dow Jones dropped 0.3%, S&P 500 also dropped 0.3%, while Nasdaq is down 0.1%. It used to be like this most of the time, but recently it's one of the few days that we see the techs. While both S&P 500 and Dow Jones closed with a red bar and the red volume indicator, only Nasdaq had closed with the green bar and the green volume indicator. But what's strange was the volume to be shrinking every day in the recent week. We see that today's volume was actually the lowest in this year, slightly lower than this few days at the beginning of March, but the lowest of the whole 2021. I think one of the reasons was because Nasdaq had been moving up and down this range for a while now, doing some tiny consolidation at this moment. And after the consolidation for some time, it's possible that a lot of people who want to sell out their position already sold within the range before, and now the selling volume is getting less and less because the market has not chosen a direction to break out whether it's up or down. So the money that's still inside the market, still holding, are just closely watching the market signal to make further actions. But whoever wants to sell, like the short-term investments, a lot of them have sold out already in the previous weeks. So now who's left inside are probably longer-term investors. So that's why we see the volume getting less and less until the market give a clear signal on the breakout direction. So that's why in the morning I said that today once again it back tested the support around 12,900 to 13,000 and bounced back up. So it's been the third day in a row that it was supported on this level and bounced back up. So I hope this support can continue holding the index, because sometimes if the support has been tested too many times, it can fail eventually. So I hope it doesn't happen too many times. And I said if the Nasdaq continue moving sideways like this, tomorrow it should be above the 5-day moving average. But today we saw that it already closed above the 5-day moving average, which is at 13,036. So we are slightly above that. Let's see if we can continue staying above this. Then the next challenge would be finally getting up above the 20-day moving average, which had been rejecting the index since it dropped below in February. A few times it has been rejected. So let's see if we can push it through this time. But for now, we are still moving in between this range above the support and below the resistance, doing more consolidation, digesting a lot of the selling pressure. And judging from the volume, it does seem like the big money had not come back in heavily to buy the dip yet. But even though all the index were down this morning, I pointed out that the Shanghai and Hong Kong index were showing good rebound for a few days, going up straight to pass through the 5, 10, and 20-day moving average. So if it can stay above the 20-day moving average now, it would look more healthy. And if we can pass through this resistance, passing the previous high and potentially 3,500, then it would start to look bullish again and look like a reversal. But for now, we are kind of at a critical point. So let's see if this resistance would reject the index to go down further. So this morning, I sent this picture and said that the index in Shanghai and Hong Kong had been growing well, so it would help a lot of our Chinese stocks to recover. So that is why even though all the index were down today, our stocks had been doing not bad. Baby Neo grew 5.7% today because I think the drop in the recent days was a bit driven by the shortage of chips, that the factory would stop 5 days of production. So it had created a little bit panic last week at some point, driving NIO to drop more than 10%. But at the same time, we have institutions like JP Morgan reinforcing the target price for NIO to be $70 because they have predicted the deliveries to be not much affected by the chip shortage issue. Especially if we don't look at the short term and focus on the longer term, they predicted to have again another 100% increase year over year for 2021 to be 90,000 vehicles. That's why with the recent drop of NIO and the target price of 70, NIO's return on investment is looking better and better, showing at least 100% of return from here. So we have seen a positive rebound today, but still we are getting rejected by this previous support, which is 38. So in the next following days, we need to look closely whether NIO can stay above this support again. Otherwise, if it's confirmed that the $38 support is broken, then we need to reach the lower support, which is 35, 31, and 27. So right now, the best case scenario would be for NIO to consolidate between this range and eventually push up for now. Now next, EH. EH had a great rebound today. At some point it was growing more than 10%. In the morning, it was as low as $30 and then it quickly bounced back up. So it was really up and down 20% during the day. I think a lot of people got worried in the morning. And it was looking like it's breaking through the support of the 120-day moving average, which was $34. And now it looks like it's staying above that. So we'll see if this can hold. I think it was growing well, not only because the Chinese stocks bounced back up more, but also because the ARK Invest had launched the ARK X ETF today, which is the ARK Space Exploration and Innovation ETF. So it's supposed to be about space exploration technology, and beyond that, also air mobility and drones. So EHANG's business should be within this range of the ETF. And if we see their holdings, we can see a lot of them are included, would have the business in drones. Like for example, JD.com, Boeing, Amazon, Airbus, Alibaba, Workhorse, and Meituan. All of these, they either are researching drone technology or the end users for drone deliveries. Like for example, Meituan is the biggest company in China for takeout food deliveries. And the second one would be Ele.me, which is owned by Alibaba Group. And JD.com is currently researching about drone delivery for their last miles delivery, because JD is the second biggest e-commerce platform that focuses on B2C business, which is business to customer model in China. And so is Amazon, who is currently investing in drone technology for their deliveries as well. So this would be a catalyst for EH. Maybe for now they are still researching more companies like smaller caps to be included in this ETF. So that might be the reason why a lot of the startup drone companies are not included here. Or maybe because they want to focus more on the bigger caps or the end users. That might be the reason why EH is not included in this ETF for now. Another reason might be because of the recent short report and the lawsuit class action against EHANG. So that might be an effect as well. But regardlessly, a lot of these companies that I just pointed out would be working with EHANG for their drones and the software technology at some point for the autonomous deliveries anyways. So this would be a good news for EHANG. Now, from a technical standpoint, we need this to stay above the support around 28 to 30, because if it's broken, it would turn to reach the next support at 22. But I think this would be a very small chance, much unlikely unless there are some really black swan news that we cannot expect. For now, if we look at the weekly chart, today we touch exactly the 30 MA to be 31 and bounce back up quickly. And from the monthly chart, the 5 MA support is at 36. So I said last week that we need this to close above 36 tomorrow. So then it would look like we can continue the uptrend with the 5MA and it's still acting as a support. Because we do have this dead cross formed, and if this support doesn't hold, then it would need to come down to reach lower support, which is at 22 again. But for now, for this week, it looks like it can move between 32 to 42. LKCO increased 2% today. It's not a big rebound, but in this market correction, a lot of the tech or Chinese stocks had dropped a lot, right? It would be quite difficult to find a lot of the tech stocks or growth stocks to still be able to stay above the 60-day moving average, right? I'll show you a few examples. See, this is for NEO. The 60-day moving average is at 51, and the current price is about 30% below that. And for EH, it's at 55. Currently, we are about 40% below. Even for BNGO, this is not Chinese stock, has also broke through the 60-day moving average, which is 9.4. So right now, we broke through the 60-day moving average, about 20%. Skills, this is the 60-day moving average. Right now, it's at 28.8. So right now, we are about 35% below. So right now, it's not often to see tech stocks or growth stocks or Chinese stocks to stay above this already. So let's hope that it can still support it, because right now in my portfolio, the only two stocks staying above the 60-day moving average would be LKCO and LKNCY. You see that both of them today had a similar movement which touched the 60-day moving average and bounced back up from there. For LKCO, it was 1.18, and today's lowest point was 1.18. And 20-day moving average was acting as a resistance to be 1.31, and today's highest point was 1.31. To be so precise, it looks like someone is heavily controlling the price, setting a lot of limit order to buy and a lot of limit order to sell. Last time this happened was during these 2 days, when it was touching exactly the 60-day and 10-day moving average to be the support and resistance throughout the whole day with tiny movements. This is signs for someone heavily controlling the share price. And we can see the volume was getting less and less for more than a week already. And they usually go very slow and taking their time because they can be patient. So we need to be patient as well. If the market gets more stabilized from here, the share price might continue doing this in the following days until we have further news and catalysts, like for example the hearings or something about Xiaomi result. If the market is not stabilized and the Nasdaq continues selling off again, or there's more black swan news from China-US political issue, then we might see LKCO get hit more. But the most I can see, if we look at the weekly chart, it would be around $1. I think that would be the worst it can be. We can be prepared for it, but let's hope it doesn't happen. Okay? Now, LKNCY is another one that is already considered the least of the devil, because first of all, both of these two companies have such a low valuation already. So it should be a matter of time, I believe, for them to go back to a normal valuation. And they're both small caps with not much attention. Similar with LKCO, it was supported by the 60-day moving average at 8.45. So it went to 8.5, the lowest today, and rejected by the 5-day moving average, which was 8.82 today, and it went as high as 8.81. Tomorrow, it should be above the 5-day moving average. And if so, the next resistance would be the 10-day moving average around 9.5. So we might see it continue to consolidate between 8.5 to 9.5 before breaking through. For ZEP, I still think that ZEP has reached a level that is quite at the bottom already. and the valuation is already so low to begin with. It might take some time to recover, but I do think it needs to have some rebound from here. So if you need to average down, I think you can grab the dip here and trim it as some rebound. The first resistance would be around 12 to 12.5. So when it rebounds, you can first trim some and get back at the next dip to continue to average down during some recovery. And a stop loss would be around 10 from here. So I think the risk reward ratio is okay. But if it does drop below 10, which I find it hard to believe, then maybe it's better you exit what you have added first and grab it back at somewhere around 8 to 9. Just an insurance for security. But I do expect this to rebound from here with some time. I don't know when exactly, but I really think the valuation for ZEP is really quite low. To drive it down further, it just makes the share price more and more attractive, and the return on investment better and better looking. And it's similar thing with YSG. If we buy the dip here, support level is at 11.5 and first target is 13.8. So you can trim some and grab it back at the next dip, and the next target is around 15 to 15.3. So that's what I would do personally if the market stopped doing something crazy again. But whenever you buy the dip, make sure you have a stop loss in case there will be more panic selling. Because when the panic selling happens, nothing works rationally. All the technical support can be broken quickly. So stop loss can save you from a disaster. So this was one of the trade we did a few weeks ago. We first bought in around 6, took some profit around 7, and then we bought in again around 6.3. And I suggested to take profit again when it was around 8 to 8.5. And last week, when it was growing quite high at the pre-market and when it opened at 7.4, I suggested if you haven't taken profit already, you can do so. So today, this morning, it opened to be near 20% dropping because it released 25 million shares at the price of $5 per share to raise 120 million. Which compared to the market cap of 621 million, it would be around 20% of the company market cap. And today at the lowest point, it was dropping near 20%. So some of the Discord members have asked me whether it's a good idea to buy the dip in the morning when it was about 4.5 to 4.7. So I said you can buy the dip and put a stop loss at 4.1. because it was quite near the support already, so the risk-reward ratio was okay. And if it does drop below it, then it doesn't look good. Today, WIMI also grew 5%. In the morning, I said in the Discord that WIMI is at the last support I drew, which basically had wiped out the whole run-up already. And if it does break this level of support, it might be a disaster. So I said we can buy the dip here from now and set a stop loss to be slightly below or around 5.5. So this morning it was at 5.8, 5.9. So the risk reward ratio was quite okay. But if it does bounce back up, first target is 6.8 and second target is 7.5. So you can continue to lower your costs like this. Today's winner was JKS because the whole solar sector was up. It has a lot to do with the speech of Biden about the clean energy. There have been a lot of speculation about the solar energy included in the plan of the clean energy. JKS had been moving above this 250-day moving average for a while now. And last time I said that I will give JKS a last chance, which would be the 250-day moving average. And if it dropped below, break the support, this is when I would exit. But so far, a few times it tests this support, it always get back up. So it hasn't failed my last hope yet. For now, it has been moving above this 250 MA and below the 20 MA. And it needs to choose a direction to break out. But for today, it increased 14% with some volume, so it's a good sign. Baidu is the stock heavily affected by the ARK margin call. And today, a lot of the related stocks had a great rebound. Last week, I said if you want to buy the dip for Baidu, you can first trim it at the resistance, which is around 226 to 230. So right now, we are getting close to this range. So it's up to you whether you want to use part of your shares of Baidu, all the dip you bought last week, to do some trading to lower the cost, because there's always risk to try to time the market. So it's your call. So usually when I do that, I would not use all my shares. I would just use part of it. So it's completely up to you whether you want to take the chance. Okay, that should be enough update for the day. Now, if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.